Hello, good morning and welcome to ET Now's the newspaper show. Before we go any further, needless to remind you, like we have been every day, that the newspapers are completely safe and all the rumors revolving around newspapers being a source of contamination for the COVID virus are completely unjustified and not true. So if you are interested in getting your paper delivered to your residence once again, please go to wantmypaper.com where you can explore all the opportunities available for the same. But switching gears, on to the stories, of which we have quite a lot lined up this morning. Let's begin by saying that the paper has, the Prime Minister's front cover this morning, so that's quite nice, flagging off the ICC annual meet, which is expected on June 11th. However, the top 10 stories are that TPG looks to join Jio juggernaut with another $1 billion bet. So this is again going to activate the Jio counter. TPG now looking to be the long line of additions that have come into this counter recently. S&P's rating affirmation may bring some cheer. So we all know they re-rated our sovereign rating yesterday, or they affirmed it rather, so at least there's no further downgrade as far as that agency is concerned. GDP may shrink 3.7% if no second wave. That's coming in from the OECD. So that's a best case scenario where there's no resurgence. Let's remember last night in America, in Texas and California, you started seeing cases and a lot of resurgence climbing in the US. Now, PE flows into realty plunges 93% in 2020. So that's another key story for the real estate sector. Private players are infusing 90% less money than they were last year. Some FIIs face 43% tax on dividend. So we all know there's so much happening in this space and so much that we're asking the regulator to do. But as of now, the taxes are still quite high on these dividends. Forex Reserves closing in on the $500 billion mark. So at least one good thing for India, our Forex Reserves are the highest they've ever been, at least close to that figure, and now definitely the highest this year at 500 billion USD. Pent-up demand drives sales. That's a CII survey. So naturally, while we've all been offline for a couple of weeks, there's going to be a little bit of a catch-up when things finally open up, and that's what we're seeing. GSK to price vaccine responsibly, says the R&D head of that company. So that's nice. Usually pharma companies, they want to extract as much as they can from the consumer. In this case, this particular medicine will not be a profiteering device. It will be more for a need-based thing. Center on edge as Delhi becomes new Bombay. So, everyone was talking about Maharashtra and Mumbai being the epicenter of the virus, highest cases, but now it seems that Delhi is not too far behind and the center is really kicking up there, preparing the beds and all the other precautions that are necessary. Finally, telecom space, another AGR case likely to be heard today. Let's remember currently Vodafone still has the highest payable, and there'll be a few lenders as well that will be in the focus on the back of that. But if any positive surprise comes, it'll be good for the lenders because right now the worst is priced in. Okay, so that was a top 10 for this morning. Let's now get you the market-related stories, beginning with the fact that the Fed sees no rate hike through 2022. So, the Fed had its policy meet last night, and there was a unanimous vote, or near unanimous, not to hike rates and keep them near zero. So this is very interesting, and a low interest rate atmosphere is what has been creating a lot of tailwind for the markets. FNO data hints at a 10,000 offers strong support. So we've been looking at the index wondering, is it going to crack below 10,000? Is it going to go to 11,000? Is it going to come down to 8,000? It seems that based on the options data, 10,000 is now looking like the new floor for the Nifty, and it doesn't look like it's going to go below that. CLSA cuts Tata Steel and JSW ratings. So that's interesting. One brokerage, two steel companies, and it's cutting both of them down. So clearly they're not too optimistic on the steel segment as far as these two are concerned. STFC Q4 net falls 70% on COVID provisions. So it's always better when the profit falls on provisions rather than actual loss. But in the case of a lender, provisions are as good as that. So we saw this with all the private banks. We saw this with Bajaj Finance. We saw this with Shriram Transport. STFC also following suit. Now, Vodafone Idea has doubled in a month, and the AGR outcome is key. So today's AGR decision might either send Vodafone into the next level If they say that AGR dues can be paid over a long period of time or cut down, if they say Vodafone has no option but to pay now, we could see that counter under severe pressure because it's gone tremendously higher in the last month. So those are the market stories. Now let's bring you a little corporate update as well. You have 3 PE firms bidding for JB Chem. So if you remember earlier on in the quarter, we brought you some news that JB Chem might be up for sale. So now it seems 3 PE firms are in the bidding pipeline. So quite interesting. Tough times in emerging markets for Jack Daniels company. So that's one company which is not looking too positive right now. SpiceJet, AAI locked in, dispute over dues. So there's some issues going on for SpiceJet and they have to sort that out before they can resume normal operations. Panacea, US company tie-up for vaccine work. So that's interesting. A local player tying up with the US company to do some vaccine research, like we're seeing so many pharma companies do to try and find better drugs for COVID. And finally, textile companies look to ride hygiene wave. So we all know the hygiene wave that's crept in, whether it's wash your hands, use sanitizers, PPE. Textile companies will be benefiting from this as they make a lot of the yarns and fabrics that go into these PPEs. So those are broadly the headlines for me this morning. We're now going to bring on board our individual researchers to start walking you through their individual sectors. So firstly, let's begin with the fact that expressing confidence in India's ability to rebound, S&P retained India's sovereign credit rating yesterday at BBB- with stable outlook. My colleague Poonam Sani, who tracks the ratings agencies quite closely, is now with us. Good morning, Poonam. Welcome to the show. What does this mean for India?
Well, some good news coming in for India's sovereign. In fact, S&P has gone ahead and retained India's sovereign rating at BBB- and also affirmed the outlook stable. This is unlike a Moody's, which recently downgraded India. In fact, what S&P states is that while risk to the India's long-term growth rate are rising, ongoing reforms, if at all executed well, would keep the country growth rate ahead of its peers. S&P also acknowledges that the COVID-19 is likely to lead to higher fiscal deficit pressure for India. However, they do expect that a high fiscal deficit this year is likely to be followed by a consolidation over the next 3 years. They're also stating that the stable outlook is reflecting the view that India's economy as well as the fiscal deficit profile will stabilize and begin to recover from 2021 onwards. S&P also mentions that the upside scenario will come in terms of the rating if the government significantly curtails the fiscal deficit, resulting in materially lower indebtedness at the government level. However, they also caution that there could be a downside pressure in terms of the rating over the next 2 years if at all the GDP growth fails to recover meaningfully, and if at all the overall government deficit is materially higher than its forecast. But as of now, good news from S&P, they have gone ahead and retained the sovereign rating.
All right, thanks for that, Poonam. Quite positive, like you said. Converse to Moody's downgrade, S&P has come in and said no, they've reaffirmed the rating. So contrasting views, but either way you slice it, our GDP will be taking a hit this year for sure. But thanks for that, Poonam, for bringing us the latest there. Now let's move forward to the telecom space. So the Supreme Court is likely to hear the AGR case today. Now basically, like I told you earlier, what it means is that there's a charge which has been put on all the telco companies, as you're aware, which they have to pay. Certain stronger players like Airtel have raised money and already paid those, but Vodafone, its current market cap is too low, its debt is very high, so raising money is not so easy. So we're hoping that or not we really, but Vodafone investors will be hoping that the court today says that they get some extension and possibly some kind of installment program to pay off their dues, and that will keep that company alive. If that company has to pay all the AGR dues in one shot, it's highly likely that they might not be able to go on forward without further capital raise. So keep an eye out for this one closely today. Vodafone will be active, the whole telecom sector will be active, and we'll be looking forward to hear what the Supreme Court has to say on this matter. Okay, from local regulator to global. We have the Fed now, and they were there last night talking about, Jerome Powell himself was also talking, and they were talking about America's approach to what's going to happen. So no interest rate hike is what they've come out with till FY22. So interest rates are going to stay low, next to 0% almost in the US. The US economy is expected to shrink by around 6.5% this year. Then they're saying next year it might expand 5%. Unemployment at the same time is going to stay high. That's all what the Fed has to say about all these things. So they're going to keep the quantitative easing and the stimulus going as well. So hopefully that can continue to take the markets higher like it has till now. But remember, we've also seen resurgence in Texas and California now. And your Dow and S&P have slid for 2 days in a row. So it'll be important to see how our market reacts as well. We'll keep an eye out on that one closely. Okay, now moving forward, coming back to the domestic situation. Fresh tax concerns for many FPIs. Jayesh knows this whole space very closely and what exactly are the amendments which need to be made to make life easier for the FPIs. Good morning, Jayesh. Welcome to the show. What's this story about?
Good morning, Harun. So what they are actually saying is that there could be some fresh tax concerns for FPIs that are actually structured as AOPs, which is trust and associations of persons. So this applies to only those. What they are actually saying that including some of the sovereign wealth funds, they could end up paying as much as 43% tax on the dividend that they receive from the listed companies, because they will not be eligible for benefits under the double tax avoidance agreement. Some of the experts also believe that, these funds are actually taxable entities in their home jurisdictions, can only avail of the treaty's benefits. So like I said, that, some of the sovereign wealth funds would actually move out of this particular, scope, and they would actually be subject to tax. Some of the countries that actually do this is the US, Singapore, Mauritius, and Ireland. So, this applies to only these countries as well. According to industry estimates, about 40% of the total FIIs in India have been set up as trust, while 10% are, associations of persons. So this is a big amount that we are actually looking at. Why this is big is because through the double tax avoidance agreement earlier, they could pay as little as 5 to 10% vis-a-vis the current proposal that is 43%. So this could be a big outgo for the FIIs as well. And of course, they are extremely concerned over this higher tax, which has prompted several funds to approach the finance ministry for an exemption. So, we'll have to wait and watch if this actually goes through or not. But in case it does, there could be some outgo from the Indian equity market as well.
All right, Jayesh, thank you so much for that. Really hoping that doesn't happen, because it's so important, that these investors keep coming back here. So I'm sure you'll be bringing us an update on that later, but thanks for joining in this morning. Let's switch gears a little bit now. We have Ajay, who's now with us, and he's been bringing you the latest on every single Jio deal, how much, what the math is. He's really on top of it. And today, there's a new addition to the list. So good morning, Ajay. Welcome to the show. Seems like TPG is now buying in as well. What are your thoughts on this?
They also already raised almost 98,000 crore via a string of deals along with Facebook. Now TPG is also circling Jio Platform. $1 to $2 billion is what they're putting in, around 1.25%. So now it's actually they've already surpassed the requirement which they have in order to repay the debt. Now they're raising extra cash. Jio Platform is clearly being seen as a technology company. It is no longer a telecom company. In fact, in the US, the term TMT comes, telecom, media, technology. That's the kind of unique way which the investor community are looking at Reliance now. And even if you see the sum of parts calculation, consumer businesses, which is retail and this telecom technology, now accounts for 65% of the total value. So there's a very major transformation which is happening as far as Reliance Industries as a company is concerned. The large marquee investors like General Atlantic, all these Facebook, Silver Lake, etc., Adia, you're talking about sovereign wealth funds. These guys, two of them actually have put in. The way they look at this company only has completely changed. I've seen it trade in 10 to 12 P 1 year forward. Now, won't be surprised if in a year's time the average multiple only goes up to 25 times or 20 times or something like that, the way technology companies are. So TPG also wants to come in now. It's not a surprise at all. Some more money is coming in, and clearly Mukesh Ambani is working very hard from home.
Right, Ajay. Most definitely is. Looks like he's working a lot harder than the rest of us. But let's see how that Reliance counter reacts today. And obviously, I'm sure you'll be bringing us more on that later in the day. But thanks again for joining in this morning. All right, let's move on now. The next story is that electronic goods companies have had to resort to imports to meet demand. So they haven't been able to scale up their local production because of everything that's been going on with the pandemic, the lockdown, the lack of logistics, lack of availability of raw materials, supply chain disruption. So, they include India's two largest smartphone players who have suffered the most, Xiaomi and Oppo. So they've decided to import handsets from China instead. So this is something to just keep an eye out on. Ultimately, this industry also contributes heavily to our economy. So we should try and make it as self-sufficient as possible, which is in any case the theme now, right, of Atmanirbhar Bharat. So relying on imports is not always positive. Now let's focus on one thing which is positive in terms of our international holdings, and that's Forex. You see, our Forex has actually been climbing, and it's at almost an all-time high. It's about to touch the $500 billion mark. So $500 billion is what we're looking at. And robust foreign fund flows are coming into India, which is helping this as well. And just to give you some math on how it's moved, they're at 493 billion. They're up 18 billion since March. So there's been quite a large increase since March. And this is the third biggest holder of US dollar currency. India is now after China and Japan. So that just shows you the kind of dollars we're holding with us. Okay, so that's a quick currency update for you. Let's also look at what the OECD had to say on the COVID hit economy, and they see it contracting at 3.7% this year. So that's what their view is. At this point, I'm not going to talk about it too much. Everyone's got a view, and depending on where the rating comes from, some people are saying negative, some people are saying neutral, some people are saying barely positive. So we'll just have to wait and watch. But just so you know, the OECD is saying 3.7% contraction this year. Okay, now that we're done with that, let's also quickly take a look at what India Inc. Is shelling out as far as GSTIA Inc. to directors, because India Inc. to shell out GSTIA Inc. to shell out GST on pay of directors who are not employees. So that's quite self-explanatory, I hope. Please do have a look at the paper if you want to understand that subject a little deeper. Okay, we're now going to change also over to the Times of India, and we're going to bring you some stories from there. So the proposal for a bad bank to take over non-performing loans for commercial bank has found little traction. So if you remember, we had brought you this story a while ago. The government was going to infuse something like 10,000 crores and start a bank which was basically going to be used to store all the NPAs which were going to come out of the other banks, because we thought that there's going to be huge defaults because of COVID, etc. That idea has not really caught any traction. Most do not see any advantage in doing this, and they're looking for maybe a different kind of solution. But Poonam, who knows about this subject she's got a good understanding of this subject. She can walk us through what the glitches really were and why it's not being viewed as an attractive idea. So over to you, Poonam. Okay, unfortunately, we don't have Poonam with us this morning, so do have a read of that story as well if you are interested. Okay, moving forward to another Times of India. It's on the page 1 and page 4. The ED brought back from Hong Kong polished diamonds, pearls and silver jewelry weighing 2,340 kilos. So that's 2.5 tons with a value of 1,350 crore that belonged to the fugitive diamond heir Nirav Modi and his uncle Mehul Choksi. TOI report says the actual worth of this stock sent from Dubai to Hong Kong in early 2018 could be lower since they were allegedly being used for round tripping after inflating their value. So we all know about this big scam that happened. At least the ED is now able to recover something. Even if it's physical jewelry, 2.5 tons is no joke. It's a lot of weight. So please do read up on that as well. Maybe it'll have some impact on PNB, who knows. Okay. We're now nearing the end of our show this morning, almost out of time, but the GIR lines up the most in 5 years. So in these testing times, wildlife conservationists have something to cheer about. India has recorded a 29% increase in the population of Asiatic lions. So that's something that's really positive and something to celebrate. It was recently World Environment Day, and it's so nice to see that 30% of the populations have gone up. This is in Gujarat's GIR forest. Now, over the past 5 years, with their number going up to 674 in 5 years, of the 674, 309 are females. So you also have good chances of reproduction and the number going up further because there's more females than males. There's 200 males versus 300 females and 137 cubs. So this period also saw 36% rise in the distribution of the area. So really positive, and very rarely do we hear stuff like this anymore. So please do have a look at that. It's on the Times of India page 1 and a really positive cue for this morning. All right, we're also going to be exploring sports today for a change. Again on the Times of India page 1. Spanish professional football fight La Liga has been cleared to resume, and it starts from today after a 3-month hiatus. And it is all set to start with Barcelona Madrid, so El Clasico, first match that we're going to see after a while. And Messi, Suarez will be seen playing, so it's going to be a great match and a great way to kick off the football season. Please do keep your eyes on that one. All right, quick top 5 from the Times of India. 1.35 lakh recoveries exceed active cases, so that's one positive cue coming out this morning as well. Want local trains but no crowds, says the CM Uddhav Thackeray. Rajasthan seals its borders for 1 week. India and China start tough negotiations. We all know what's happening there. GSK, Sanofi plan 1 billion doses of vaccine. Let's hope. All right, thank you so much for tuning into the newspaper show this morning. Stay tuned to ET Now.